Welcome to the Explainer. Today, we're going to break down NetApp's latest quarterly earnings report because there's a really fascinating story behind the numbers. It's a look at a company that's firing on all cylinders, but has one major challenge looming on the horizon. Okay, so let's just dive right in with the headline number. NetApp beat Wall Street's earnings per share estimates by 5 cents. Now, that might seem like a small number, but it signals a much, much bigger story of outperformance and a major win for the company this quarter. And you know that confidence? It was echoed right from the top. The company's CEO, George Kurian, he did not hold back. He framed this as a record-breaking quarter and set a really strong tone for the future. So how exactly did they pull this off? We're going to look at the record numbers, the AI and cloud boom that's driving their growth, the memory price squeeze that's creating a major headwind, and their 4-point plan to navigate it all. All right, first up, let's take a look at the big picture results from their most recent quarter. This is really where we see the proof behind all of those positive headlines. Now, what's so interesting here is the consistency. See, they didn't just barely get by. They beat expectations on both revenue and on earnings per share. In that 4.4% year-over-year revenue growth, that shows some really solid, sustained momentum. But where is all that growth actually coming from? Let's move on because the real story is in two of the absolute hottest sectors in tech right now, AI and the cloud. Artificial intelligence is a massive, massive driver. Just look at this number. In this one quarter alone, NetApp engaged with about 300 different customers just to build the data foundation for their AI innovations. That is a huge surge in AI-related business. And this chart just illustrates their performance brilliantly. I mean, double-digit growth is fantastic, right? But a 65% year-over-year explosion in their Keystone storage as a service offering, that is just incredible. It shows you the customers are really hungry for these more flexible ways of getting their storage. Their core all-flash array business, which is absolutely critical for those high-speed AI workloads, also hit a new milestone. For the very first time, it brought in $1 billion in revenue in a single quarter. And to make this all feel a little more real, the CEO pointed to their work at the Super Bowl. I mean, think about it. A super high-stakes, no-fail environment where their technology flawlessly managed billions of data points, powering everything from the giant video boards all the way to security operations. But, the quarter wasn't a complete victory lap. Behind all this success, there's a pretty significant challenge brewing in their supply chain, and it's putting some real pressure on the company's profitability. This big challenge is something that's completely outside of their control, a force that could really disrupt this incredible winning streak they're on. The CEO called it unprecedented inflation in memory prices. What this means is that a core component of their hardware is suddenly getting much, much more expensive. So what is this NAND memory they're talking about? Well, simply put, it's the key ingredient for their high-speed all-flash storage systems. And when the cost of that main ingredient skyrockets, it directly eats into their profit on every single unit they sell. So this is a pretty serious issue, but NetApp made it clear they're not just sitting back. They laid out a really proactive 4-part strategy to fight back against these rising costs. Their plan has a few different parts. First up is pricing. They're not afraid to raise prices. Then, it's all about agility and managing their supply chain with their partners. Third, they're working with multiple suppliers to manage costs. And finally, they're using their diverse product portfolio as a strategic tool, offering lower-cost hybrid systems to give those price-sensitive customers more options. So, with these growth drivers and this clear counter strategy in place, what does NetApp expect for the near future? Well, their official forecast tells the story. This slide shows their guidance for the upcoming quarter and the full year. And this is where the story gets really interesting. Despite all those cost pressures we talked about, they're still guiding for continued strong revenue growth of about 8% for the next quarter. Their overall revenue and earnings forecasts are still really solid, which signals confidence that they can manage through the storm and stay highly profitable. And that brings us to the core of this story. You have NetApp performing at an incredibly high level, just riding this massive AI wave. But at the same time, they're sailing directly into a supply chain storm. So the big question this leaves us with is whether their strategic plan will be enough to navigate these headwinds and keep the momentum going.